Welcome to another week in review. We're looking at the trading week of July 28th, 2025, and it is a doozy. So we're going to start off with data, get this out of the way because there's a lot. There's a lot that's going on this week. We have to be pretty open to pretty much anything this week because we've got some really big market moving releases. We just had news. It's Sunday at about 2 p.m. We just had news about tariff delays or extensions, I guess, for China, an EU trade deal. So there's a lot. There's a lot that's come out. The expected range on the S&P 500 is only about 75 points. We might blow straight through that. I don't really know. So we'll get into data pretty quick here. Monday, we don't have anything major to pay attention to. We have earnings too, I'll talk about as well. But Tuesday, we have consumer confidence and JOLTS at 10 a.m. Wednesday, we have the ADP print at 8:15, 8:30 advanced GDP. 2 p.m., we have the FOMC rate decision. 2:30 p.m. we have the presser. Expectation for the July rate in the market right now is no change. So it's not usually incorrect, but anything can happen right now with the amount of pressure that's going on. But the expectation from the market at the moment is that there is no change to the federal funds rate. Thursday we have core PCE price index as well as jobless claims. We have Chicago PMI at 945. That won't be a big deal, but we do have it. And then Friday, we have NFP, just to make things more fun. So we have NFP and the unemployment rate of Friday. And then we have 10 a.m., we have the ISM manufacturing PMI. So huge releases this week, very impactful. Basically have to be open to anything happening this week. I wouldn't really hold a strong bias. The daily time frame is very extended, but obviously, higher time frames continue to be one time framing up. This market is strong in the sense of, there's nothing really that's been able to sell it back down. It's very low net volume the last few sessions, which is to be expected in the summer, just kind of a summer drift, but just be open to anything this week, especially with all this coming out. So we have big earnings too. So we'll talk about that quick. We have the big ones to pay attention to, I think, as far as market implications really are going to be Wednesday, Thursday. But I'm paying attention to Tuesday with Visa, Starbucks. Those will be interesting. And then obviously Wednesday after close, we have Meta, Microsoft, Hood. Not market moving, but we have Hood, QCOM. And then Thursday after close, the big guys, we have Apple, Amazon. We also have MicroStrategy or MSTR as well, if you're in that. And then Friday we have Exxon and CVX in the morning. So really big earnings Wednesday, Thursday, and we have hugely impactful data being released this week. So going into higher time frames a little bit. The big thing that I've been saying the last couple of weeks is that we're continuing to break away from this huge trading range that we've put in. And again, as far as like an overall bias or net bias, buyers really aren't in trouble right now until 6160s are broken. So the daily, the monthly, the weekly, and the daily time frames right now are all one time framing up. So we're framing higher. The thing that I think I would pay attention to, the thing that I have pointed out for myself, is that we have 4 consecutive daily poor lows, which is a big anomaly from a stats perspective. So my opinion right now, obviously, is, the market continues to frame higher. There's no reason to try and pick a top in this market. With the amount of data that's coming out this week and with the market stretched the way it is on the daily, I think I need to be open to both sides of this trade potentially, and not just assume that we're going to continue to rip higher from here when this is such an outlier situation that we're in. If I'm looking purely at my book scrapes and looking at how something like this generally would react, we could continue melting up. That's entirely possible. But as far as what the stats say to me is that we should be correcting some of these lows relatively soon, and the time frame for me generally is about a week, looking to see at least these 2 lows get corrected, which they don't have to. But as far as what has happened in the past, it would be a pretty big outlier to not at least try and sweep these lows at some point in the next week, which could be this week, could be next. So just keeping that open. As far as where I'm looking immediately, I think the news that we had this weekend with the tariff extensions and with the EU trade deal, I think it's fairly likely that we'll probably gap up on Sunday Globex, and Obviously, the easiest pivot right away will be last week's high, which is a poor high as well. So this should get corrected at 64.30s. And as far as the extension trade goes, 200% from the 3-week balance that we broke out of is 64.65s. So this ultimately for me is going to be a target this week. If we're accepting the upper part of Friday's distro, we might just rip and go straight here in the overnight session, which is entirely possible. But the big thing will be working around Friday's distribution up here. So if we want to take out the news aspect of this and we want to look at this objectively from the idea of, okay, we have nothing that's materially changing in this market as far as news goes, the way I would play this and the way I would intend to play this is buyers ultimately want to hold this breakaway from this weekly range, from this prior 3-week range, but we want to hold immediately this breakaway in this upper distribution, and we put in singles in F period at 64.16s. So basically what I want to see is if there's interest in buying this above 64.30s, or if we have some sort of dip and some sort of inventory correction up here, can we hold where we broke out of? Can we hold where we broke out of this prior daily range and hold 64.16s? So if we see a decent low get put in here, so if we see a bit of a correction back down, we see a decent low get put in here around 64.16s, we see a bit of a sweep or potentially a sweep back down into last week's POC, this 10-point range here, 16 to 06s, and we see a decent bid, then again, it's just going to be staying on the long side for me and ultimately looking for the final extensions up into 64.65s. Anything above last week's high, I'm not going to try and pick a top, and I'll be looking for the long trades and get those extensions back up into 64.65s. It's possible we see some selling activity up here. Again, with the amount of information coming out this week, we could easily run this all the way up, and we could easily mean revert at some point this week as well. So we're just gonna have to take this day by day and just see how this range starts to develop. But as far as immediate signs of strength, anything above 64.16s, holding this upper distribution from Friday, to me is looking for a bullish imbalance back up into 64.65s. Then we'll see if there's some sort of short that sets up here. But again, I'm not looking to try and fade this market unless there's something extremely obvious that presents itself. Where the poor lows are sitting, Friday, basically all last week into Tuesday, all have strictly what are considered poor lows. So we have no real excess on any of these lows. Where I'm interested in trying to fade this again is if we start getting into these upper extensions and we start trying to, if the order flow shifts up here and I have some signals that start to fire and we start looking like we could potentially balance out or try and correct, maybe there's a short trade up here. But again, I'm not going to try and front run anything in this market. If we start accepting below 64.16s, then I think, and we see some heavy selling and some acceleration below 64.16s, through last week's POC, then cleaning up at least these two poor lows down here into 02s and 96s, I think is fairly likely. And also this POC is technically naked. So what we could see is a little bit of a puke back down below into 63.96s, clean up these two lows, and then see if there's any appreciable bid in here. I think if we're starting to accept below 63.96s, I think the likelihood of a bid in this range is fairly limited. And what I'd probably be looking for is to stay on the short side and look to basically backfill this breakaway from Wednesday, and probably look down into the bottom of Wednesday's distribution and the back into the top of the 3-week balance range that we broke out of. So it would basically be an entire traverse of last week's value if we start accepting below 96s. That's how I'd see it, especially considering we have two other poor lows that are below this, and we also have another naked POC from the RTH session down here into 50s. So as far as the short-term line in the sand for buyers, to me, it's down into 63.50s. So if we see acceptance below 96s, and if we can stay on the short trade to get back down into 55s, again, we could easily see a nice low get put in here. It would be back testing the prior 3-week balance breakout, and then we could easily continue rotating higher. So managing around the upper distribution of Friday, acceptance above last week's high, continue to look long for 65s. Again, we have to be conscious of the fact that we could potentially have some pukes below into 16 to 6s, but if this If basically Friday, we'll call it Friday's value for for simplicity. If we're accepting Friday's value, if we're unable to sell below Friday's value, then the continuation long trades are what I'll be looking for. We start puking below, we start getting below 96s, this poor low here, so we correct these lows, but we can't accept back above 96s. I'll look short to see if we can get back down into 55s, and we'll see what kind of reaction we have down here. That's all. I'll try and play that. NASDAQ is going to be pretty similar. NASDAQ it's been interesting because the order flow in the NASDAQ has been, I won't say obvious, but it's been muddy in some aspects, but it's been obvious in other aspects. So this 23,420s area was, huge resistance for, several days. And Friday's session, we had to look above and fail of this area, this actually formed balance of this balance as well. And then we had, a decent bid start coming into 23,330s and a decent amount of absorption into the low on the previous day. And then eventually we actually were able to break away, but we didn't really have the acceleration I would have assumed that we would have gotten with how pinned this range was. So it surprised me in the sense of, generally when you see, if we just want to look at this, plainly as like a support resistance flip, really heavy resistance on pretty much every time frame. And then we broke away, but we didn't have that really accelerated drive away. So just not what I expected. But the thing is, from pivot perspective, I think using 23,420s, anything above this again is going to be staying on the long side, looking for the extension trades up into 23,580s and 23,740s is where I'm looking. So above 420s, I'll be looking to continue on that long side, try and reach up into these upper ranges. I think if we start offering 23,400s below last week's POC, then again, we could see a bit of acceleration down into the bottom end of last week's value. We do have a naked POC down here at 23,200s. So, below 200, I think the rotation down to 220s to potentially 200 is on the table. But again, I'm not really looking to fade this until we see some real strong conviction to the downside, which we just haven't had, and we just haven't had enough volume on either of these indexes on a daily basis to really have any type of conviction move down. So that's how I'm going to look at this. I don't have much to add really on the NASDAQ. I haven't really been trading it much. And I think the big thing for me will be to, continue looking on ES for, clues on the broader market. If we see at some point, the data come in and we see a weakness start to flow in, and I wouldn't even consider it, I wouldn't even say at this point weakness, I would just say exhaustion. If we start to see exhaustion from buyers, then I think, ES will be a good gauge, a good barometer to use to see if if there's any interim period that this market really wants to cool off. And I think to me in the short term that would happen probably below the bottom range of 63.96s, and then potentially backfill in last week's structure and come back and test the weekly break or the weekly balance that we broke out of. So hopefully that helps. It's a packed week. Don't be married to a direction. Don't be married to a position. This market is very extended to the upside on the daily. I am certainly open to looking at both sides of the tape this week with the amount of information that's going to come out that could potentially move the market. Obviously, buyers are in complete control of this auction with every major time framing higher. So I'm not looking to try and pick a top and fade this market. But if we do see some sort of shift, we see exhaustion finally, we see a bit of a shift that could potentially give us a bit of a correction, then we just have to be open to the fact that we have a lot of poor structure below us. We have poor lows below us that could easily get cleaned up fairly quickly, and this market is very, very long right now on the indexes, so we could easily see some fast liquidation moves higher, which again might just give us another dip to buy. So you start seeing acceleration down, don't get caught trying to catch a knife, don't get caught holding the bag trying to be a buyer late up here. Wait to see some structure form, wait to see a decent bid start to form, and then look for, pick your spots to look for a bid. So that'd be my advice this week. If you find this video helps at all, please like the video. Please subscribe to the channel if you haven't. Appreciate your time. Thanks.